Hey guys, Mariko Berg, Realtor with BRIDGEWELL Real Estate Group here in Coquitlam, British Columbia, Canada. And today's vlog, I'm going to be talking about an appraisal in real estate. And I've brought on my friend Kevin Oake from Oake Mortgage Services to help answer common questions that we get with regards to an appraisal. So, Kevin.
Hi there, my name's Kevin Oake. My son Ryan and I are owners of Oake Mortgage Services, and we're a division, or not division, we're under the Dominion Lending Center's umbrella. Happy to be here today.
Cool. So, first question, most basic, what is an appraisal?
An appraisal is essentially a physical report on the property that the lender is looking to secure a mortgage loan against.
Okay, and why does the lender request an appraisal? Why do you need an appraisal?
Well, they just want to be sure that what they're, securing the loan against is all that it's said to be. So they'll go to the property, they'll check for moisture, they'll check for any ill repair to the property, but more importantly, they just want to make sure they've got a record of what that property was like when they did secure the loan. So photographs will be taken of all the rooms, measurements will be provided, there'll be a comparative of what's sold in that area, most recent sales, and there could be up to 6 comparables. So it's a pretty in-depth report. Generally I see them about 20 pages long. And then within that, they'll outline what they see as the market value. Now, one thing I will say, if somebody purchased, I'll just use a figure of $550,000, they bought that property thinking that that was what it was worth. I will rarely, if ever, get an appraisal that will say that property is worth $552,000 or $575,000. They'll always tap it out or max it out at that purchase price. If we are doing an appraisal for a mortgage renewal, it could be a different story. When I submit those files, I use what tools I have to try and get a good estimate of what the value of that property is. And let's just use that 550 figure. If I think it's worth 550 based on the tools that I've got to work with, but the appraiser comes back and uses market comparables, and that appraisal comes in at 540, we've got $10,000 difference there. And generally it doesn't make a big difference in this market because people that have purchased have generally had some growth in value, or they've added equity to the property. But if there has been no change in the equity position, and you need that $10,000 to get to the 550 value, you will have to add that, because the lender is only going to give a percentage of the value in most cases. So there's not two sides to it, but there's a couple of components or reasons why you would need an appraisal. But generally, it would be the purchase side of it, and it's really to identify what the market value is of that property.
And so if the appraisal falls short of what the agreed offer price is, then the lender will often ask you to make up the difference in terms of adding to your down payment, something
Yes.
like that.
Yeah, you'll have to lift your down payment. And I haven't seen it yet, but it can happen. So the way I look at things, and I think that's the way that the lenders and appraisers look at things, that if 550 was paid for that property, that is what the market bear, especially if it's a multiple offer situation. I mean, most people aren't going to pay 550 for a property that's only offered at 540 unless there's a competitive offers on it. So you would have to shore up the shortfall if it did come short in the appraisal side.
And if
Assuming that there wasn't enough income and there wasn't enough down payment to work it out otherwise.
Right. And if you guys are concerned about market value and things like that, really, when you're working with a realtor, a good realtor should be providing you a comparative market analysis prior to actually writing an offer, searching those comparables much like an appraiser would do, and basically properly educating you and instructing you with regards to what you should offer and making sure that you're actually paying what it's worth. So hopefully that will help in terms of the appraisal side of things to make sure that you don't come up with any issues at that time. But does everybody need an appraisal? Does everybody need an in-person appraisal? How does that work?
No, an appraisal needs to be done, but the insurers, so CMHC, General Canada Guarantee, they use their internal data to identify the value of a property. The lenders in some cases will also have enough tools to do an automated appraisal. Right now I find that if the values are over $750,000, we almost always will have to get a physical appraisal done. unless it's a high ratio or an insured mortgage. And those are the three cases when you may not have to get a physical appraisal done. So if it's a high ratio mortgage, or the mortgage is under 750 and we go to the right lender, we could theoretically get automated appraisals that don't take up a lot of time, and they don't cost that much either. So relative to call it a $350 appraisal cost, it's an automated appraisal with lenders generally around $100.
Awesome. That answers my next question about how much it costs. So anyways, guys, I hope that you learned everything that you really feel like you need to know about the appraisals. If you do have any questions or want to go a little bit more in depth about it, or have specific questions, feel free to reach out to us anytime. Again, Mariko Berg, BRIDGEWELL Real Estate Group, and Kevin Oake from Oake Mortgage Services. We're more than happy to help. Have a good one.